May the 11th, Michael Vaughan with Brian Acker. Well, since I spoke with you last, Brian, Sarkozy is toast. The Greek government is toast. The people aren't buying austerity.
Absolutely not. And I don't blame them, actually. I'm for the people on this one.
So okay, then what happens to the debt? You're saying if you're for the people, you're for default.
Absolutely.
Oh.
Yeah, so they can't survive with the euro at that price. The Germans can.
Yeah.
Maybe the French, maybe the people of Holland. But when you get to Spain, Portugal, Greece, unfortunately Italy, they can't afford it. And it'll take probably a good 10 years for them to reform their economies in a way that, even get close to, Canadian economy in terms of liberalizing trade. It'll probably take a generation.
So you're saying default and devaluation and goodbye euro.
Absolutely. Or the German people are going to pay for everything.
Uh-huh.
So,
yep. If they want a cheap euro, that's how they do it. If they want to export, they've got to pay the bills.
Absolutely. And a year ago, you hear Germany making demands, the line in the sand, but the lines have moved.
Yeah.
Every month the lines have moved. And I think Merkel's playing for time and trying to convince the German people there's something to save here by being together as opposed to being apart. And I think the German people, and they have moved substantially, but whether they move ultimately to the we're going to pay for everything and we're all together, I guess we'll find out.
Well, this quagmire, it cost us all our gains for the year. Look what happened to the market after those elections.
As expected. I mean, we had a good, this is like the third year in a row.
Yeah, right.
We had a great first quarter, and what we've done is try to protect it a bit. So we raised cash, as we said in the last video.
Yeah.
So our positions aren't as what we call risky. So we're not really going for the.
Yep.
So we're up about 4.5%, certainly in the U.S., and we're about flat in Canada. Canada's just been crushed only because of the cyclical companies and the nature of the Canadian economy. So oil stocks have been down, and the gold companies and metals. Not that we have many, any at all, but they're just getting crushed here in this particular market.
I want to ask you about J.P. Morgan Chase, the good American bank, and it was in the portfolio quite recently.
And it still is. Yeah.
Is it?
Yeah.
It got hammered.
It got hammered last night, and under the caption, "Will these guys ever learn?" Blew up about $2 billion on complicated derivative transactions. The good news is $2 billion is a drop in the bucket, but it just goes to show you the trust factor. Since 2008, the banks have been building trust. We're different. We can manage the conflicts, was my favorite line. Sure you can. And now, supposedly, the bank who did the best throughout the crisis.
Right.
Now comes it.
But Jamie Dimon gets up and says, "We was stupid. We was stupid. We won't do this again."
Well, after the first quarter call, it said, people were asking about potential losses because this has been rumored for quite some time.
Denied it.
And he said, tempest in the teapot.
Right.
So, look, these banks have got to go back to the old world. And if the CEOs do not like just lending money, doing mortgages, boring banking stuff, Jamie Dimon and others have to go out and do their own hedge fund.
Yeah.
Take their own capital, take their clients' capital, and if they go to zero, they go to zero. And I think this happened at a crucial time where the banking industry was fighting back on much of these reforms, especially the U.S. But with this, I think the arguments have been made that, what, guys, my solution is, as opposed to the regulations, which is about 2,800 pages, fire them all. And if you put a woman as a head of you know, this.
The SEC or the banks?
No, we already have a woman at the SEC.
Yeah.
But these big banks, and because those assets need to be cared for.
Yep.
Because the underwriter is the taxpayer, and how great would that be? So I think that's, throw out the rule book, put a woman in, and I think.
And until then, you're going to be underweight financials.
Probably.
Yeah.
For quite some time. But anyway, I mean, financials did well in the first quarter.
Yeah.
They've retraced all those gains, certainly in this quarter. So I mean, it's a love-hate going on with those things.
So what's your plan here for well, we're getting in toward the second half of the year, just to go down the risk curve, just to hunker down?
No, because as I wrote in my blog, there are going to be opportunities to trade up to about $14.50. And we won't know when that happens. Yeah. But what I try to say to people is, look, when you're most optimistic, take some off the table. Yeah. When you're most pessimistic, I think today or days like this count, add a little bit of risk, because I think that's the way you win. The overall trend in the market, the fundamentals, the earnings are still going up. Year over year, it's about 18% growth in the balance sheets. But I think how you do it in terms of adding and subtracting risk throughout this market, you'll be a winner in this market.
Always interesting, Brian. Always interesting. Thanks for your time. I'll see you early in June.
Michael, great to see you.